really need indicators or price action to be profitable? Why traders argue about these two comparatively? The answer and the uncomfortable truth is neither of them guarantees you the profitability. So, in this video, I'm going to compare price action and indicators side by side so you will get all your answers. Make sure to watch the video till the end and you will compare in the end that whichever works for you. So without wasting any time further, let's get started. So now let's first talk about the price action. So here I am on the trading group charts and I have opened BTC US dollar Bitstamp exchange chart. So now let me first explain you hypothetically what exactly the price action looks like. So here, let me show you first the example of an uptrend, then we will discuss about the downtrend. Okay, so all of our on our charts, the uptrend some should look like this. So the price goes up, price comes down, then goes above again, and then comes down again, then goes above again, and so on in the uptrend. So now let's talk about the downtrend. The downtrend looks like something this. Okay, so here we have both the uptrend. Let me write it down here. The uptrend, and let's write it down here. The downtrend. Okay, so now let's first talk about the uptrend. So in uptrend, price makes higher highs and higher highs and higher lows, and so on. And in the downtrend, price makes the lower lows, lower highs, lower lows, lower highs, and so on. So if you're talking about the uptrend, let me mark it right here. The higher highs are denoted with HH, and the higher lows are denoted with HL. Okay, so right here, let me make it okay. Higher highs, higher lows, right? This again. Okay, so here they are. Let me adjust it a little bit. Okay, so these are higher highs and higher lows. Price in price action, when you're looking in the uptrend, price is judged and marked by these two characters, the higher highs and the higher lows. Now, second concept comes in, which is also known as liquidity huts. Price goes up, price comes down, makes another high by breaking this previous high right here, and then comes again low to make its higher low right here. Then price goes above again by breaking this previous low and makes a newer higher high. But meanwhile, why did someone ask why the price is going upside from after coming the downside in the uptrend? The reason is the stop losses resting somewhere around here, or it could be somewhere around here. So what happens is whenever the price comes down and goes upwards, make a newer higher high, it will come down to hunt the stop losses of the previous traders, which have put the stop losses somewhere around here behind the previous higher low. So what happens is you will also going to notice that whenever the price makes a previous higher high, it will come down and make a sharp wick down below a higher low by eliminating the previous stops resting below this low, and then eventually it will rally higher upside more and more like this, as I mentioned in the example. So this is a classic example of uptrend price action. There's a concept of support and resistance as well. Let's assume there's a support level right here. Let me make it non-extended. Okay, this is a support level right here, and there is a resistance resting right here. Let me make it red. Okay, so this is a resistance and this is a support level. So whenever the price approaches the support level, we as a trader expect the price to be bounced upside and make higher highs. And whenever the price gets rejected from the resistance level, actually, let me write it down right here. Let's make a text a little bigger, which is resistance. Okay, so this is the resistance, and this is a support level. Okay, right here. So whenever the price reaches for support, we will expect the price to bounce upwards, and whenever the price reaches to the resistance level, we expect the price to come downwards. So these are the three main concepts of trading price action. Now, there are many, many more details into it, but we are not going to discuss that much deeper. We are just here to understand the comparison between the price action and the indicators. So now we talked about the uptrend. Now let's talk about the downtrend right here. So similarly, if you opposite the uptrend version, you will eventually get your downtrend. So in downtrend, price makes lower lows. Let me write it in capital. Lower lows, which is denoted by LL, and price makes lower highs, which is denoted by LH. Okay, right here. And eventually, price, whenever the price breaks this low right here, it will make a new lower low. And price will come back up to retrace a little bit. It will make a newer higher high, and eventually it will break this low right here again and make a newer lower low. So this is the process that has been followed by the price since many, many, many years. Since when the market started, these lower lows and lower highs concept exists since then. So price makes lower low, lower highs, breaking the previous low, making a newer low, and then lower high again. Similarly, the liquidity concept lies in the downtrend as well. Let's suppose this is your previous lower high. Price makes a new lower low and comes all the way till right here. Let me put this aside a little bit. Okay, so this is our new lower high. And now assume the short sellers in the market, like if you think naturally, when where could be the stop losses of these short sellers would be residing? It's behind this previous above the this previous lower high. So you would see that sometimes price comes to make a lower high and a sudden sharp wick appears right here, by which will eliminate eventually all the short sellers stop losses from resting above this lower high, and then eventually price will rally lower, make more lower lows. So this is the liquidity concept in downtrend. I hope you understood this. Let me make this chart manual again. Okay, right here. So the support and resistance concept also lies in the downtrend as well. Let's make a resistance and let's make a support level. Let's make this green right here. Okay, now let's write it down right here. Actually, let me copy it. This is a support level, and this is a resistance level. Now, if you combine the uptrend and the downtrend side by side, you will see that whenever the price touches the support, it will start rally upwards and make higher highs and higher lows, which will eventually bring you towards a uptrend. And now we are talking about the higher time frames, not the smallest time frames. We are talking about 4 hour daily time frame or the weekly time frame. And whenever the price reaches at the resistance and gets rejected, and whenever, now this is the most important part, whenever this previous higher low, if we get the closing of our candle below this higher low right here, keep this in mind. Let me mark it right here. If we get the candle closure below this higher low, this will be known as market structure shift, which let me write it down here. Market structure shift, which is denoted by MSS. Let me put the structure to right here, MSS. Now, whenever the price we will get the closure below this higher low, then price will start making another lower high like this, then eventually lower low, then again the lower high, then lower low, and so on until it reaches a support zone, which will eventually throw the price above again by breaking this lower high. And then we will consider this a market structure shift, and this will be start of our new uptrend, making higher highs and higher lows again. So this is the most basic concept used by the millions of traders across the world, known as price action. So this is the basic of price action. I've explained it to you guys. Now let's talk about the indicators, but before going to the indicator section, let me show you a live example of uptrend and a downtrend. Let me show you right here. So here you can see the price is in the downtrend right here. Okay, price making, or eventually let me show you by marking this. Okay, so price created a higher high right here. Then price comes back right here, creating eventually a higher low. Now see that this high is been broken right here, eventually making another higher high. Right here, I'll consider this as a higher high. Okay, now this high goes broken. Now this is a higher high right here. Then price came below and make another higher low. Now the important part is this higher low is protected while this higher low was being created. So this is not a market structure shift. Now see right here, let me mark this higher high again. Right here, this high broke. We got the candle closure above this higher high, so we will consider this higher high a newer higher high. Now look right here, let me mark this with a trend line. Price comes below to retrace and eventually creating another higher low. Remember that this low is protected, so it's not a market structure shift. Now keep calm. I'm going to show you guys a structure shift as well in a downtrend example. Now see right here. Let me mark this one right here. So this was the high which broke the previous higher high and became a new higher high. Now, since this is a new higher high, this is our recent higher low, which should be protected at all cost if the price wants to eventually trend higher. So now let's see either if it's get protected or broke. So now this was our previous higher low. Look how eventually price didn't broke above this high but consolidate right here, then eventually a sharp move towards downside. Now look closely here what I have told you guys, a wick below this higher low to eventually eliminate all the buyers from the futures or the spots buys which have placed their stop losses below. Market eliminated them, and then eventually if you see it, price broke this higher low. Now what we will get after the higher low gets broken, we will got our new lower low. Let me mark it as we discussed earlier in a hypothetical situation that whenever a higher low gets broken, we get our new lower low. So here we got our new lower low. Price goes up a bit, we got our new lower high. Now see it right here. The price broke this lower low and eventually made a new lower low right here. So this was a new lower low. Price rallied upwards a little bit, created eventually another lower high. Then price broke this level as well. So look right here. Here it is. This was our new lower low. So now let's see that the price is currently in between, consolidating in between this lower low recent and this lower high. This is a live chart of Bitcoin US dollar. I'm performing the analysis on. I'm showing you guys a live example that price is in between this lower low and this recent lower high. So if the price breaks this lower high with a high momentum, the chances are price will like rally here somewhere around here to like consolidate and then boom upwards, or either if the price doesn't respect this like lower the momentum thing, it will broke this lower low again, then rally towards downside. So this was a very easiest example of how eventually trend works on price action. I've showed you live example by marking the trend and showed you all the examples. So now let's talk about the indicators. All right, so here I am back on the same chart with the indicators on. Now we will see three to four indicators, but the first two indicators are EMA 100. The styles, you can see it right here. The inputs is 100 EMA, and the RSI is default settings on trading view. Here, now let me show you what indicators exactly do. So if you see that this 100 moving average is used by millions of traders again across the world, and it is used to judge the trend. If the price is above this moving average and caps on it and then goes above, it will consider as a uptrend. And whenever the price comes below, give a tap, again reject it, give a tap, and again reject it, it's considered as a downtrend. So now if we see with the eye of RSI, whenever the price goes above this 70% level, it will consider as overbought region. Like as in this asset is overbought and there is a room for a classic, you can say retracement. And similarly, whenever the price comes downward below this 30 target level and becomes red, it means that the asset is in the classic oversold region and there is a room for rally upwards. Now, keep this in mind that like in price action, there are some flaws in price action as well. Nothing is perfect. Neither of both of them can guarantee you the profitability, but there is lagging in indicators as well. Now, if you see right here, at here, the RSI was the most extreme downwards right here. Let me mark it at this low and right here. The RSI shows a extreme oversold region, which told us to buy right from here till here. But then again, according to the RSI, this was the most bottom region. The price couldn't go much lower than that, but eventually we got the price much more lower than that, eliminating us from the trade. But if you see it from the EMA still stated that the price is below the moving average, which means the long-term trend is still downtrend. So if you are about to hunt the trading opportunity, it should be downward side, not the upward side. Now let me apply another indicator, which is MACD, moving average convergence and divergence. All right, so here is our classic MACD. Now, if you see it right here, what MACD does is whenever these two crossover between the orange line and the blue line, when the orange crossovers blue from above and shows red volume, it means that the trend is potentially becoming towards downside. And whenever the MACD, this moving average converges divergence, then orange goes below the blue line and shows green volume, it means that the price has potential to go upwards. But there is some lagging in this indicator as well. As you can see it right here, it doesn't show any signal right here. It shows that there is still room for a possible more lower side. But look closely right here at this very top right here. The MACD showed a crossover. So whichever trader have bought around this level somewhere right here would got stopped out by this level because MACD showed a wrong signal or a wrong, you can say, confluence to the charts. So now I have showed you three indicators. So now what is the exact like meaning of these two things, the price action and the indicators? Which one will make you profitable? The answer you will get in the next part. Now let me show you both of the comparisons side by side. So now let's talk about indicators versus price action, or in other words, if you are a real trader, you can say, how can I use both of them and utilize the ability of both of them to make my trading expertise like more efficient? So now let's deep dive into it and let me show you. So if you see right here, now I have applied moving average of 100, which is known to be used for trend-based judgment. And I have marked the structure as well. If you see, this was a start of uptrend right here. I have marked higher highs, higher lows. Now, whenever two confluences combine together, that's where you get more confident either if you are going to trade in the uptrend or you are missing something. First, you get the confluence that yes, the price is making higher highs and higher lows, then again higher highs and higher lows. Now notice right here in this box what happened. Let me mark it with yellow. Price crossed above the moving average, making a new higher high, then below the moving average, and eventually rallying up higher, which will give you two confluences. Number one, the trend is upside, check mark. Number two, finally, the price is above the 100 moving average exponential, which shows you that yes, the trend is really towards upside, which is uptrend. Now you can hunt for upside trading opportunities. Similarly, when the price broke down this higher low, eventually making a market structure shift right here, and exact same time price broke down from this higher low and the moving average at the same time, which gave you the confluence, like the two confluence exactly, which we got right here and exactly right here, that yes, the price is now in the downtrend and we can successfully take the trades towards downside, hunt for short selling setups. So this is the power of two, that how you can utilize indicators and price action as well. Now let's look with the eye of RSI. Now, here you will find many laggings. As I say earlier, look at right here. This was a trend starting higher highs, higher lows, higher highs, and higher lows, and RSI was already on the overbought region, which gave you the wrong signal. If I were be a newbie trader or someone who doesn't know how to utilize these indicators and price action, I will be shorting right here, and eventually I will be stopping out from the market because of this rally right here. And now that doesn't mean that RSI doesn't give you a good signals. Look right here, RSI gave you a signal of the bottom right here, and then eventually price rallied up much more higher above from this level. Let me mark it right here. So it's you, that how you are going to use this indicator. Now the lagging I'm talking about is right here. If you see it, at this lower low, RSI showed that this is the most extreme bottom the price could get. But eventually, price rallied up a little bit to make a lower high. Then eventually, boom, stopping you out again. And the RSI is consolidating like no one gives, no one cares actually. So it's you, that how you are going to utilize these indicators, combining them with price action. Now let me show you the MACD as well. You can use any indicator by just back testing it. Remember, the back testing is the most important key aspect. Okay, so now let me show you right here. If you see it, the MACD shows a crossover exactly at the point from where the uptrend started, and the green bars, which denotes that the volume is coming. Now you get the confluence, number one. Number two, the price rallied up higher. You can take the upside opportunities. Now that's the three confluences. Now, if you see it similarly, that MACD lags as well. If you see it, the price make a higher low, taps on the moving average right here, and then flies upwards again. The MACD lagged here. MACD shows you a crossover right here, which means that the price could go downwards. And same as I said before, if I were a newbie, I could take a short selling opportunity and then boom, stopped out from the market. So eventually, guys, it's only you versus you, that how you are going to utilize these price action and indicators combined side by side to make your trading strategy, or make your trading, you can say, approach much better whenever you are combining these two, like price action and indicators. Never be a kind of guy who says, I will like price action versus indicators, or price action against indicators, or indicators versus price action. No, that's not the right approach. Always go for how can I utilize both of them to make my trading approach more efficient, and more, you can say, I can trade with the more confluences by combining both of them. So that comes to an end of the video. I hope you like the video of me combining these two concepts of that both are way apart, indicators and the price action. So guys, keep that in mind that there is a key saying that market doesn't care if you either have 5 indicators, 10 indicators or 100 indicators on your chart, or either you mark the whole past, whole future with the price action. Market cares either if you have a consistent strategy which you can consistently apply on your trading career. If you are not able to apply or use a strategy consistently, doesn't matter if you have the best strategy in the world, you will end up losing everything. So keep that in mind. Always use both of them, or either choose one and master one. Do not go against each other concept, because these are both ways apart. Each has a strong base community, strong traders. Many of the traders I personally know in my trading career have a very profitable career in their trading journey just by using indicators. And some of them, many of them actually, I know personally have a great trading style just by using price action. So always master both of them, never go against each other. Let me know if you like the concept and what other concepts you would like to me to do a video and show you guys the comparison as I showed you here on the live charts. Next video will be on the BTC analysis, that how I personally do my Bitcoin analysis. I'll see you guys in the next video. Make sure to give this video a big thumbs up and subscribe to the channel. I'll see you guys in the next video. Until the next time, happy trading.